This is Shah, and Solana is once again proving why disciplined trading always beats emotional reactions, because right now the chart is repeating history in a way that only patient eyes can recognize. When a coin consolidates under a major resistance, forms the same pattern it formed the last time a big move happened, and reacts perfectly to support levels that we have been discussing for days, it is not random. It is a story unfolding the same way it has before. Solana is currently trading around $130. In the last update, we talked about the consolidation happening right below the support, and I told you that this kind of sideways structure, especially when it forms right at a key level, often leads to an upward expansion. We identified the mini resistance at $144 and highlighted how Solana had done something very similar in the past. It consolidated, created a double bottom, and then shot upward. This time the same pattern appeared again. Solana formed its double bottom exactly on the lower side of the consolidation, lifted from the support with strength and pushed toward the 144 level just as expected. Congratulations to everyone who followed the analysis, because that move was around 18%, a clean and predictable breakout from a familiar structure. And the beauty of pattern repetition is that when the market does something twice, it usually means the structure is strong enough to do it again. But here is where the story becomes more important. Even though Solana delivered the expected move and reached the mini resistance, it failed to break above 144 and rejected sharply from there. Many traders see a rejection and panic, but this is exactly where understanding structure becomes more valuable than emotions. The rejection was not a breakdown. It was simply a reaction from a known resistance. And instead of losing its strength, Solana returned back to the support around $130. Now, this level is the key to everything. As long as Solana holds above 130, the entire bullish structure remains valid. The same pattern that played out before the last move is still intact. The same support that held before is still holding now. A coin does not need to break a resistance on the first attempt, especially not one as important as 144. Sometimes the first attempt creates the liquidity, the second attempt tests it, and the third attempt breaks it with conviction. If Solana continues to hold 130, the expectation stays exactly the same. It can push upward again, revisit the resistance, and this time break above 144 with a proper continuation candle. A clean breakout above that level opens the doors for a larger expansion, because the liquidity above the resistance has not been collected yet. The market rarely leaves such untouched regions for long. But as always, you must watch the structure, not just the price. If Solana loses 130 with a clean close and starts building candles below it, then the structure shifts into a deeper retest scenario. Until that happens, the bias remains upward, the pattern remains valid, and the support remains the most important decision point on the chart. Stay calm, trust the structure, and let Solana give the confirmation instead of trying to predict the noise. And if you want more daily updates presented with clarity and patience, keep following along, and the right information always guides the right decisions.